In the last lecture, we had started looking at some real life data problems and was trying to see how classification models can be built on the basis of the theory that we had learned during the theory lectures. So, we had considered several problems, couple of problems when we had 2 class problems, basically we had looked at that. So, today we will look at multi-class problems and look at implementation of the theoretical classification models that we have learned for classification in those real life problems. We will also look at an alternate approach of classification, which is going to be based on not statistical classification techniques that we have learned. It is going to be based on artificial neural networks, which provides an alternate way for classification model building. Let us now look at this multi-class problem. So, we first have this data, which is a very standard data, which is called the Fisher iris data. So, it is corresponding to 3 species, Sentosa, versicolor and virginica. So, these are the 3 classes. So, we have 3 populations, pi 1, pi 2 and pi 3. So, these are corresponding to the 3 different species of this particular data. Now, this is what is the data. So, it is the input variable, the feature vector is comprising of the following variables. We have got sepal length, sepal width, petal length and petal width corresponding to each of these species that we observe, and the 5th entry here is the corresponding species identification. Now, we have made this numerical values corresponding to these species. So, any observation, any feature vector with a particular observation sepal length, sepal width, petal length and petal width is having a tag of class membership, which is 1 if it is belonging to this Sentosa population, that is the first pi 1 population. It is given 2 if it is from the second population versicolor, and 3 for virginica, which is pi 3 in this notation. So, the data is given in this following form. It is implemented in SAS. So, this is the format of the data, that this is the first variable, first dimension of the input space, this is the second dimension, the third and the 4th dimension. So, these are 4 dimensional data, and the 5th entry in that order is going to give us the class identification. So, this is the pre-classified data, the training sample data, that is what we are looking at. So, similarly for the, this is corresponding to the first record. For the second record, this is the value of the first variable, second, third and 4th. So, this is the feature vector, and corresponding to this particular feature vector, I am sorry, corresponding to this feature vector, this is the class identification 3. So, this feature vector is coming from pi 1 population, this feature vector similarly is coming from pi 2 population, pi 3 population, because it is 3 here, and similarly for the others, right. Now, the problem is that based on this learning sample data, we are going to build our classification model. Now, as we have seen various different approaches of building such classification model. The first one is when we are trying to look at the Fisher linear discriminant score and classification that is going to be based on linear discriminant score. So, we use proc discrim once again of SAS with the class membership as the species, and we take equal priors in the 3 for the 3 populations, and the feature vector has got these 4 variables, right. Now, this discrimination procedure, now these are the elementary records what we have, that's and then the class level classification, what we are looking at is prior probabilities to be equal, and hence we are choosing them to be these prior probabilities. These are the frequencies of data in the learning set. So, we take the weights to be equal. Now, this is the linear discriminant function that is built, the Fisher linear discriminant function, usually under a normality assumption. So, what we have are, these are the parameters corresponding to this species. These are the parameters. So, these are the parameters corresponding to the respective variables that we have on this side here. The labels, of course, it is sepal length in millimeter, all these are in millimeter units. These are the parameters, linearly combining parameters, this with a constant term. So, for the species this pi 2, this was our pi 1 population, this was our pi 2 population, and this was our pi 3 population. So, these are the coefficient vectors corresponding to the respective populations. Now, based on these, we are going to base our classification records. Now, this has got two dimensions, that on this side we have got the true memberships. So, an observation which is from this population, it can be from this population and it can be from this population. Now, let us see where they are getting classified into. So, this is on the basis of the Fisher linear discriminant function. We are classifying 50 observations coming from this species Sentosa into the class Sentosa. So, this is a 100% correct classification, that is what we have, and there are no misclassifications corresponding to observations which are coming from this Sentosa species here. So, there are no misclassifications, 0 and 0. Corresponding to this species here, which is our pi 2 population. So, these are the 3 populations, pi 1, pi 2 and pi 3. Corresponding to the second population, 48 members coming from this population pi 2 are getting classified into the same class. So, this is the correct number of classifications that we have observed, and we have got one to be misclassified here into this particular class. And corresponding to the third population, we have 49 observations correctly classified. So, we see the correct classification percentage is 100%, 96%, and we have got here a 49%, I am sorry, 98%. So, this is what is giving us the number of observations and % classified into the respective species. Let me go to the posterior probability of membership. So, this has got the same interpretation as what we had we discussed in the last lecture. So, these are the posterior probabilities. Now, a particular observation vector is going to be classified as to belong to a particular population if its posterior probability is the highest. For example, if we look at this row of the record, then we see that this posterior probability of belonging to this species here, which is the pi 2 population, is the largest, and hence this observation on the basis of posterior probabilities is classified into this class here, and similar is the interpretation. So, wherever there is a star mark here, it indicates that there has been a misclassification corresponding to those records here. So, for example, we had 1 observations coming from this class Virginica, but the posterior probability we observed that is highest for this versicolor species out here, and hence this observation from this population Virginica is classified wrongly into versicolor species, right. So, this is how all these are interpreted. Let us move on and look at what we get for the quadratic discriminant score. This is once again the similar type of table that we had earlier. This is the number of observation and % classified corresponding to a quadratic discriminant score. So, this once again is from which species they are coming. These are these observations, that is what we have. So, we have got these observations 50, all of them correctly classified, 47 of them correctly classified, and we have got 49 out of a total of 50 being correctly classified, 47 out of a total of 50 correctly classified, and so on. So, once again we observe a very high percentage of correct classifications corresponding to this setup. I think it is marginally it is almost the same, I think, just comparing with what was that corresponding to a linear discriminant function, it is almost what we had for them only. Now, for the same data, if we adopt another approach of k nearest neighbor classifier. So, in the k nearest neighbor classifier, what we are trying to do is to look at the input feature vectors and then look at a neighborhood, a k neighborhood of that particular point in the input space, and then within that k neighborhood we are trying to find out what are the class memberships of the other input feature vectors that are falling within that neighborhood, and then looking at the average of the class memberships of those points which are falling within the k nearest neighbor category. And that is a non-parametric method. So, it has got its own advantages from the point of view of having it as a non-parametric method. So, we use a non-parametric method option from the proc discrim of the SAS procedure. So, all other things remaining the same, we have got once again class to be the corresponding species of these 3 categories. So, the variables, or rather the elements of the feature vector once again is 4 dimensional. we are looking at nearest neighbor classifier. So, we have got this classification confusion matrix. So, these are the correct classification numbers along the diagonals, and the off diagonals denote the misclassified observations. Once again, the performance of the nearest neighbor classifier marginally not as good as maybe the quadratic discriminant function, which had 49 here. So, on the correct classification diagonal, but its performance once again is satisfactory. Now, we look at another real life problem, which is a problem from the area of currency management, not exactly currency management, it is foreign exchange management, and trying to look at what sort of a classification model one can build for prediction of currency crisis events. So, it is the discrimination of currency crisis event points. Now, what is the objective of this particular study? Because it is a bit different, this example. So, it is better to look at what is the objective and what the data is all about. The objective is to build a warning system for currency crisis. So, what one is trying to do is the following, that given the present state of a particular economy, looking at economic fundamentals data at that particular point of time and its past history, one is trying to build a model so as to classify a present time point as indicative of an impending currency crisis event. Now, currency crisis event, currency from the point of view of foreign exchange reserves. So, it has to be once again defined what do we mean by a currency crisis. So, these are rare events, these are extreme events. So, we are basically trying to model some extreme events by saying that at a particular point of time we are going to classify that state as indicative of a possible crisis or not. So, it is a two class problem that we are looking at. So, either a present state would be indicative of a future possibility of a future crisis. So, that is maybe state 1, and the other one is not indicative of a future impending crisis. So, that would be the other state, which we say that it is the 0 corresponding to that particular variable. So, we have two population problem. Each time point is going to be classified as coming, or rather is indicative of such crisis points or otherwise. So, that is what we are trying to do here. Now, the warning system is to be based on the past history, as I said, of economic fundamental indicators of a particular country. Now, this is an event which is of interest to any economy as such, and hence we are looking at economic fundamental indicators to span the feature vector space of this classification model, right. So, given the set of data, one would classify at any time point the present state of the economy, as I said, as indicative of an impending currency crisis or otherwise. So, that is a two class problem that one is talking about. So, either it is belonging to pi 1, which is indicative of crisis, or it is belonging to pi 2, which is not indicative of a crisis. Now, crisis point defined through construction of an index of exchange market pressure. Now, how do we construct such an index for exchange market pressure? It is a very common thing to construct such index for exchange market pressure. Now, a particular country would be in a sort of currency crisis if two different things can happen, either both of them happen or one of them happen in that particular severity. So, this index actually is calculated on the basis of those two aspects of a currency management, foreign exchange currency management. So, it is basically one that is exchange rates, which is say for our country dollar euro, dollar say rupee dollar rupee euro type of rates. So, it is the exchange rate. If it depreciates very heavily, then there is a pressure on the currency of that particular country. So, that is going to add to the pressure on the exchange market, and hence eventually is going to lead to a situation of a crisis in the currency domestic currency with respect to the foreign currency. There can be another aspect of this currency crisis, which is in terms of gross international foreign exchange reserves that a country holds. So, if that goes down significantly, then once again there is a pressure on the currency, foreign exchange currency, and hence it is going towards a situation of a crisis. In acute situation of depletion of gross international reserves, one is going to have some sort of a currency crisis. So, an index thus, when we are looking at an exchange market, index for exchange market pressure is going to be calculated as a weighted average of monthly percentage change in the exchange rate and negative of the monthly percentage change in gross international reserves, right. And hence this is basically a weighted average of these two quantities. If this is too high, monthly percentage change or monthly percentage increase in the exchange rate is too high, and if this goes down significantly, then it is going to have definitely a situation of a currency crisis. Now, the weights for such a weighted average is chosen so that the two components have same conditional variances. So, these two components, which are the constituents of the exchange market index, actually index for the exchange market pressure, these coefficients here, the weights are going to be chosen such that the two components have the same conditional variances. An increase in the index thus can be due to either depreciation of the domestic currency, that is exchange rate becoming too high, say from 48 to 58. So, it is a huge depreciation as such of the domestic currency, or actually depletion of the reserves, or a combination of both, right. Thus, we are going to look at the behavior or the movement of the index for the exchange market pressure, and if it exceeds certain threshold, then we are going to call that particular point a point of currency crisis. So, on the light of the index for exchange market pressure that we have constructed, what is thus a currency crisis and why, what is its prediction? So, currency crisis in such a situation is whenever the index of exchange market pressure, as we have defined earlier, crosses a threshold value appropriately to be defined. Now, what we are trying to do in such a situation is to build a classification model for predicting events of currency crisis within next 12 months window. So, as we said that at a particular time point, we are trying to predict the state of the economy as one which is indicative of a crisis within some time window, which is taken in the present example as a 12 months window. So, given the state of the economy at a particular point of time, we are looking at what classification can be done as to looking at that point to indicate some crisis events to happen within the 12 months. Now, the usefulness of such a model is important because usefulness is huge, because if one is able to detect such points of currency crisis, then one can take not one from the point of view of the economy or the policy makers of the economy. They will actually be looking at controlling the situation so that such a crisis event does not actually occur. That is why a prediction window length of 12 months is taken, so that enough time actually remains in order to correct the situation, correct the path of the economy, so that such a crisis event can actually be avoided. And in such a situation, we are looking at this model to give us an early warning prediction system, right. Now, the model thus is capable of generating alert signals. So, at each time point, one can have this alert signals being generated based on the output of such a classification model. Let us see how we are going to have it. Now, for illustration, we take a particular country which had witnessed huge currency crisis event points in the late 90s, which is Indonesia. There was currency crisis in Indonesia, Malaysia, and other countries there in the Southeast Asian currency crisis period. So, this is what is the index of exchange market pressure that is constructed from that weighted average of monthly percentage change increase in the forex rates, and also negative of the monthly percentage change in the foreign exchange reserves. So, these are the points. So, accordingly, if we choose a certain threshold based on quantiles of this data, one will be able to indicate that, well, this is perhaps a point of crisis, this is perhaps a point of crisis, this definitely is a point of crisis, these points are points of crisis, and so on, right. So, based on the threshold, one can identify if we choose say this line to be the threshold corresponding to which we will say that if the index exceeds that particular point, a point is going to be called a crisis points. So, after identification of all these crisis points, as in here, we look at modeling those crisis points. Now, as I said that the input to this particular classification model, the feature vector, is going to be economic fundamental variables, because a country's health as such, country's financial health is judged on the basis of economic fundamental variables. And hence, we choose here the economic fundamentals from different sectors of the economy to represent different sectors of the economy. We choose indicators from external sector, we choose indicators from financial sector, we choose indicators from real sector of the economy. Specifically, we use these variables as to comprise of the input feature space. So these are the variable foreign exchange reserves in US dollar, foreign assets minus foreign liabilities, imports, exports, sustainable forex reserves, real interest rate on deposits, ratio of broad money to gross international reserves, differential real interest rates, ratio of lending to deposit interest rates, money multiplier. So these span actually or rather go across various sectors of the economy as such. Similarly, these are the other variables that are chosen. Huge number of variables have been chosen so as not to miss out any important variables which might affect the future course of the country. So ratio of broad money to gross international reserves, real interest rate to deposits, differential real interest rates, ratio of lending to deposit rates, ratio of domestic credit to GDP indicating the output sector. So stock of commercial bank aggregate deposits, time deposits, demand deposits, index of output once again to indicate what sort of output is there in the economy, deviation of the real effective exchange rate or the REA from the trend, and so on, right. So having chosen these as the input variables, we first look at what sort of classification model we can have for a logistic discrimination based model. So we use a proc logistic from the SAS and then look at these to span the input space. So foreign exchange and all those variables are plugged in here. Now we are looking at a stepwise selection procedure for selection of the variables with the appropriate criterions, and then the logistic discrimination model is finally going to be classified on the basis of, or rather would be used for classification based on predicted probabilities. Now if the predicted probability is based on a particular feature vector exceeds 0.05, I'm sorry 0.5, that is half, then we classify that to belong to population with class membership as 1, that is indicative of a crisis, and if it is less than that 0.5 we classify it otherwise, that is it is not indicative of a crisis. The output of such a logistic discrimination function is given in the following confusion matrix. So these are the actual classes. Now each of the data points are now on the in the learning sample, they are classified either as a no crisis point or as a crisis point. Now after the prediction model or the classification model is built, so it can either go to a no crisis point being classified as a no crisis point, or it can go to a point classified as a crisis point. So what we observe is that 95 no crisis points have been correctly classified, 13 crisis points have been correctly classified, and there are 9 cases of crisis points which are wrongly classified as no crisis points. So this is a wrong classification that we have done here, and if we look at no crisis points being classified as crisis points, it is huge, 27. So there is a this is cross, this because this is misclassification. So these two numbers here indicate wrong classification or misclassification of the present data using a logistic discrimination function. So the results of logistic discrimination function is not that encouraging actually. The situation changes little bit. Now these are the association of predicted probabilities and the corresponding observed responses. So we have percent concordant just at 73% actually, percent discordant is quite high at 26.8%, right. So these are the measures of association which are not that high as such to call such a classification model to give us a good classification results. Now from this simple logistic discrimination we move on to still a logistic discrimination using lag values of the explanatory variable. In the previous logistic model we did not actually consider any lag values, we had just considered the values of the explanatory variables, that is the values of the economic fundamental indicators at that particular point of time, say t, and then trying to see whether one can correctly classify any crisis events that is there within next 12 months time period. Now here what we are doing, the difference we are doing is we are including some lag values of these economic fundamental indicators which are acting as additional explanatory variables to this particular system. So we add lags at 3, 6 and so on. So what we observe is that now this is the summary of the forward selection procedure for the logistic regression model, and these are the variables that are basically kept after the forward selection procedure, because we have a huge number of variables including the lags of various economic fundamental indicators. So, we use a selection method here. Now, the results that we get here, this is the association table, association of the predicted probabilities and the observed responses. We see there is a huge change, marked change in this percent concordant data. We have a 99% concordance actually of the predicted probabilities with the observed responses. Accordingly, once again the measures of association also now shows marked improvement, and hence they are pretty high, indicating that the classification is now good actually. Now, the thing actually changes if you look at the confusion matrix. It is huge difference than to what we had earlier. Now, 103 of no crisis points have been correctly classified into no crisis points, and 39 crisis points have been correctly classified as crisis points, and there are just 2 points of misclassification. So, it is a huge improvement as to what we had earlier when we had looked at without including any lag values. So, one basically have to play around with the data, what feature vector one is having, and have a proper understanding of what that data basically means, have proper domain knowledge about the data, and that can vastly improve the performance of the classification model. Even a simple logistic discrimination model can, the performance of it can be vastly improved if we look at including such lags, which for any economist or any analyst is natural, because many economic fundamental variables can have the effect at a future time point, not necessarily the time or rather the value of that particular variable at that time point. One can actually look at the values of those economic fundamental variables at a lag 3 months, 6 months. They are going to still have say important role to play while building such classification models, right. So, this is what we see for this logistic regression model. Now, as I said that we are in this lecture also going to see how the classical problem of classification to a statistician can be solved using an alternate approach of artificial intelligence, wherein we try to build up artificial neural network models which can be used once again for the same purpose as what a Fisher linear discriminant function or a logistic discrimination function or a k-means k nearest neighbor classifier was basically doing. So, one can have the same problem translated to an ANN framework and then try to see if one gets a better result. So, a need might arise that if there are complex dynamic systems such that simple statistical models are unable to resolve this classification problem, one can under such a situation have understanding of alternate procedures that can be used in order to have the classification done properly, right. So, here we are trying to build up ANN model for classification. Now, how we are going to do that? Before that, what are neural networks? It is a standard thing. So, for completion we just write it here. An artificial neural network is a computational algorithm which is inspired by the parallelism of human brain. So, it is basically the parallel processing of the human brain that the artificial neural network system tries to mimic. So, it tries to mimic the human brain's cognitive ability to identify patterns and to make forecasts and decisions based on its past experience, the historical data. So, the neural networks, of course, it is not only emerging, it is a well established technique, and it is a challenging computational methodology that offers a new way to model complex systems as such. Now, this is what is a neuron. The building block of any neural network system, the artificial neural network system, is what are called neurons. So, they are the basic processing units of any neural network processing model. So, it has got its name from the biological abstraction actually, when neurons are the basic processing unit in the human brain cell also, with a cell structure called as soma and axons actually sending out signals, with dendrites providing the inputs at a particular time point, and these denoting the synaptic gap. So, remember this particular structure of this figure, and this exactly the same structure is going to be replicated when we talk about neurons or the processing units in a computing device. Now, wherein in a computing device, when we talk about artificial neural networks, what we are trying to do is to have sets of inputs. So, these are n inputs actually coming to one processing unit. So that processing unit, suppose we didn't say that it is the processing unit, it is the basic computational unit of an ANN model, and the name is still a neuron. So we are looking at this to process this information in terms of these inputs, sets of variables. Now these inputs come to the processing unit, which are of course multiplied by corresponding weights here, which signify, this is going to be actually W1 and this is going to be W2. So these are the weights of importance that are attached to each of these inputs. So it's same for the biological processing of impulses, wherein all the inputs to a brain may not be equally important. So one has different weightages associated with each of these inputs, and then the work of this processing unit is to process this entire information, the values of the input variables along with the weights that are attached to each of those inputs. So it combines the input, n inputs, in terms of looking at a weighted average of these inputs, and then applies a transfer function to process this net input value, what we receive at this particular neuron, in terms of having some function of the net input value, which is arriving at this particular input or neuron or processing unit of this artificial neural network structure. And then that output, that after it processes the input at this neuron, sends out an output which is the output of this particular neuron. When we talk about an artificial neural network architecture, then we have maybe a huge number of such processing units arranged in layers in order to lead us to a complete architecture of a neural network, wherein we can have layers of these processing units, which are usually termed as hidden layers. So we will have those layers of processors. So in between the input vector and the output of the neural system, what we will be having is series and say a number of such processing units or neurons arranged in layers, and then these parallel processing of the information goes on until we get an output from this particular system. Now there are various types of such structures of artificial neural networks, say feed forward networks, feedback type of networks, and so on. So it's not an ANN class, so we will not get into the detail of that. Now how neural network works, it's basically a nonlinear model that can be trained to map the past and the future values of a time series type of data or any other type of data. Now try to extract, by doing so we try to extract hidden structure and relationships governing the data. So it's definitely a powerful pattern recognition capabilities of ANN model. It's a very powerful technique in that sense. It complements algorithmic, statistical and artificial intelligence approaches for supporting decision making. Now what are neural network models as such in the context of traditional statistical methods? A neural network model in the context of traditional statistical methods can be termed as a multivariate, a non-parametric and non-parametric inference technique that is totally data driven and model free. It has the ability to model nonlinear dynamics and to deal with noisy data, and it has got distinct advantages, as the literature of neural network modeling suggests that it has got distinct advantage over the traditional methods, both in terms of accuracy and computational speed. Now we use the neural network models, we also use a genetic algorithm approach also in order to optimize the structure of neural network models. So what we are trying to do in the given problem of that currency crisis prediction is to build a neurogenetic classification model of currency crisis. So we are still building classification model under a different paradigm, though it's basically on an artificial neural network framework. So we are trying to build ANN model for classification, and while building the neural network model we are using a genetic algorithm based search, GA based search procedure, systematic search procedure, in order to optimize the architecture of the neural network. So what we are doing, we are building a neural network model and genetic algorithm based classification model for classifying time points as indicators of impending currency crisis or otherwise. So the problem remains the same under a different paradigm though. Now such a classification model can be used once again as an early warning signals model, signal system actually, for currency crisis. Now similar models, now this is just one of example. Similar models can be definitely created for other type of extreme events, any other form of currency crisis or appropriately defined extreme events. extreme events in the sense that one can have multi-class also. So one can have 3 types of events. Say for a loan classification problem, one can look at a particular loan application to fall into one of 3 classes, which is say low risk, medium risk, high risk type of classifications. Once again, that type of classification cases can be tackled under such a paradigm of ANN models. Now what is the framework? We already know that what basically are the inputs to this particular classification model system. It's the economic fundamental indicators along with its various lags are the input to this system. So having chosen the set of leading indicators, we will have to design a network, a neural network. We take here a feed forward multi-layer neural network for modeling the crisis events. Now the objective of this is to assign a probability of an impending currency crisis that might happen within the coming 12 months. So the output of this system is going to be once again predicted probabilities. The predicted probabilities based on the values of the economic fundamental variables along with its lags, and it is going to give us as an output of the ANN system as predicted probabilities. Now what is the ANN formulation of this problem? This is thus having the input layer comprising of the leading indicators. Leading indicators basically the term that is used because we are using those economic fundamental variables as leading indicators, leading in the sense of those variables providing some insight about possible future events, and as such they are called leading indicators along with their lags. The output layer is a binary crisis identification variable created from the index of exchange market pressure which exceeding certain threshold exchange market pressure of the training set data. So based on that particular data records, we are basically going to look at what is the binary variable taking the values. The binary variable say is taking the value 1 or 0, 1 if a point is a crisis point and is 0 if it is otherwise, and hence we are creating that binary variable from the index of exchange market pressure by seeing whether that exceeds a certain threshold or not. If it exceeds, the value of the binary variable is 1, so it is going to one population. If it is otherwise, it goes to y equal to 0, and that is towards the second population, say pi 2. Now the output of the neural network is interpreted as the predicted probability of a crisis event within 12 months. We have already discussed this, the predetermined crisis window. So having seen the ANN formulation of this problem, classification problem here, what we are now going to do is that we are going to build that ANN model, and as I said that we are going to use genetic algorithms in order to optimize the structure of the neural network. So the choice of the optimum set of leading indicators, that is the variables that are going to be finally chosen in order to have this classification model in place. So those indicators having the maximum impact on the forecasted probability along with their lags. So this is one aspect. The neural network structure comprising of the number of hidden layers, the layers of processors, and the number of processing units, the neurons in each of these hidden layers, then transfer function of the processing units, which can of course be different for different processing units, neurons, and optimum learning rate parameters. Typically if we are looking at say a backpropagation algorithm for training the neural network, some learning parameters like the learning rate or the momentum rate are associated with such a learning algorithm. So optimum learning parameters have been arrived at with the help of genetic algorithm stochastic search procedures. Right. Now once the model is built, then we look at classification confusion matrix. So these are the classification results. So once we have built this particular model here using such a genetically optimized ANN structure with the input and the output variables as formulated in the ANN formulation, when we look at building the data, we actually divide the data into 2 parts. It is standard when we are looking at a neural network learning system. We divide the entire data set into 2 parts. One is termed as a training set data and the other which is called a test set data. Now this split of the total data into 2 parts, training and test set, can be extended. One can have a third set of data which is the second test set data called a validation set data. So what one tries to do is to build the model on the basis of a training set data and then see how the model is performing on the data which it has not seen before. So that's what one looks at the performance of the model what one has built on the test set data. right. And then if one wishes, one can have a third data set which is called a validation set, which is once again a type of test set, the second test set. So, the performance of these models has to be have to be judged on the basis of its performance that it is giving on the learning set, that is the training set data, and the data which it has not seen before, that is a test set data. So, this is what we see. We have divided the data into two parts, learning set data, learning set or the training set data and the test set data. So, we made a split of if I remember correctly, it is around 80% 20% split. So, 80% of the total records that we had was kept in the training set and 20% of the data was kept in the test set. So, we build the model, the classification ANN classification model on the 80% of the data, and then use that model and then walk forward to the test set data and see how many in the test set are getting correctly classified with the model that has been built on 80% training set data, right. So, what we the results as we see here, it is on the training set data, it is a perfect classification on the training set data with no misclassifications, 0 misclassifications corresponding to such a problem. Now, we move on to the test set data. This is the data which the model has not seen before, that is at the time of building the model, this is kept aside and kept as a test set data. So, this is the result corresponding to that test set data. We see that the correct classification numbers are 7 plus 21, 28, and only one observation here is misclassified. So, these are the correct classifications. 21 no crisis points in the test set data have been correctly classified into no crisis points, and 7 crisis points have been correctly classified into crisis points, and only one crisis point was misclassified as coming from a no crisis point. So, the result of course corresponding to this ANN formulation of this classification problem is showing that it is capable of actually doing a decent or not decent, actually it is doing a good job for this classification 2 class classification problem of this crisis identification. Now, we said that at the beginning that such a classification model, when we are looking at this formulation, can work as a warning system for future crisis points, and this is what is such a warning system can look like. So, this is the output, we say that, of the warning system presented as a plot of the predicted probabilities. Now, what it is doing is that at this particular time point, which is this time point out here, at this time point the classification model is taking the input of the economic fundamental variables which we are treating as leading indicators of possible crisis points, and then with the values of that indicator along with its past lags, what we are now generating is a probability that there will be a crisis event in the next 12 months window. And one keeps on monitoring the values of those predicted probabilities as in here at every time point on a continuous basis, and then looking at the output of such a system, one is in a position that whether the state of the economy at that point of time is going to lead us to some sort of a crisis situation. So, looking at this, actually one looks at, now there were actually severe crisis points around these times here. The lines are not exactly straight, but these are the time points, say September 97, October 97, November 97. So, these are the time points of actual crisis. So, in the cross validation part, we see that if these were actually the actual crisis points, then if one considers the output of the ANN warning system to give us some warning system, then all these points which are having probabilities of crisis prediction within 12 months very high, it is over 8 for all these points, only one point here was below 0.5. All other points previous to the actual points of crisis really had actually given very high probability actually very prominent signals, very clear signals of a possibility of a crisis event happening. And as such, we can thus say that such a system is definitely an acceptable warning system when we are looking at prediction of such crisis events. So it's basically it's just a classification model, and then the output of the classification model is taken in terms of having the outputs as some sort of giving warning signals to such extreme events. So we will end this particular section on discriminant analysis with this lecture, and we will look at the two other remaining concepts in this class, in this course, which we are going to look at factor analysis, and which is the concept of canonical correlations. Thank you.